Who can start this? I hope this week you guys have gone through the pre-scene. Aditi, Akhilesh.
Yeah, Miss Ba, I have gone through. I actually covered it last time, so was
Okay,
expecting somebody else to start.
sure, sure. Harish, have you gone through the pre-scene?
Yes, I've gone through it, like all the CFO, CEO, and all everything, CW, CEO. So till there,
Are
I've
you reading
understand.
the pre-scene daily? First
Yes,
word to
yes.
last?
Like I'm reading the case study every day. Like I'm getting some ideas and all.
Good.
I'm going through the, yeah.
Can you just give an overview? What does this company do? Give a summary, Harish. What do you understood from the pre-scene?
Yeah. Like RB company is they manufacturing
Start as a first person. Like my name is Harish. I work as a senior finance manager for Robobryce or RB. We are based in Testland, like that.
yeah. My name is Harish. I'm a senior manager in RB company. My role is like I have to directly go to board of directors on special projects and strategic matters. And RB company is based in Queensland, and they have moved to Darland. Like they are like 12,000 employees, which and Queensland have 5,000. 7,000, Darland at 7,000 employees, and in Tasland there are around 5,000. And
Okay.
what should I
Step by step,
more
when it
like?
was founded, what type of
It
service?
was okay. It was it was established in like 1952, and it's yeah, and it has been listed in the Tasland Stock Exchange, and even its main role is to like for the manufacturing warehouse, giving to other companies fitting equipments, and even designing of softwares like robotics and all, like, and even scaling up how much it will take, like scale the area and all. So the company goes all the things. So even forklifts, this all they provide.
Okay.
Yeah, and
You
and
can
they
talk
are
about.
like
Yeah,
sorry.
continue. Continue. Continue.
Like they recently, because they recently, like 2005 I think, so they moved to Darland because they have highly skilled people in there, and even the low cost for wages, so they can make them work in low cost, uh, and and they have different like AMR autonomous mobile research in Tesla. In Tesla, it is mostly in the industrial, for industrial thing for in Tesla, uh, and uh, and they are like they are barcodes, like autonomous mobile research, like barcodes and laser, for so that they can easily easily trace the products and all through barcodes, and they can read through lasers and everything. In Darland, it's like a forklift, hand truck, pump truck, and all. So these all things are done in two different areas. And beside Tasland, they have open like they have their own manager, CEO, around 900 people in engineering, mechanical, uh, CFO, CEO, and all, based in beside it's beside the Tasland factory. So yeah, that's it. Misbah, and more I have to
About
go through
the
it.
board of directors, the risk, what we are facing, the news article. You can have a look at precinct. No?
Yeah. Okay. Okay. Sure. Sure. Like I have to go more deeply, and I have to look once again.
Okay,
So yeah.
good job. So every
Thank
day
you.
we'll start the class. Every time we have to do this quick review. Okay. So we are left with board of directors. That is the main topic to start with today, and financials as well. And apart from board, risk and the media is remaining. So anybody else to cover that part? Maybe Aditi. Aditi, can you hear me? Hello.
Yes, sorry, Miss Ba, I can hear you. I was trying to turn on the mic. Um, um,
Yeah.
I have while we were doing the class, I made like short notes that I go through. I don't like read the entire thing like over and over again. There are things that you told that during the class that you need to remember, and some things that that can be just you can just read it through and you understand those.
Right.
So
Right.
yeah, so Harish did not cover the mission vision statement. So mission statement of the company is to grow the business in a manner that advances social well-being, and mission can be changed during the time to enhance the envision is to enhance the efficiency of our customer, and in doing so to add value to the society.
Right. So what do we understand by it?
Like company is trying to give customer satisfaction to its customers, uh, and while doing this they also want to provide value to the society and create a change in the society in a positive manner.
Right.
Like environmental balanced life, if the people who are working there, so it would be balanced life for them working over there.
Yes. Okay.
also
Continue. Yeah.
Also in the news article that was there on the case study, they manufactured a warehouse which is which does not need many workforce to run it. In that process they don't need lights all the time to be switched on, so that they save that will be helping the environment because we are not using too much electricity to run
Right.
that house. Yeah. Also we have different um, bo- n- board of directors in RB. We have Sudhanayak Sudhanayak Patnaik as non-executive chair, who is a mechanical engineer. And our board is quite diverse. We have Eva Durska as a CEO, who has a background in logistic manager, and she eventually became a head of logistics in her previous company, and she was also the first director of research. We have Imon Macaulay as a chief operating officer. His background is electrical engineer, and he has also completed his part-time MBA during his job. Um, we have Philip Yildiz, who is a CFO. He's a qualified accountant, and he was previously a chief accountant at a manufacturer uh, of construction equipment. We have Director of Research, Dr. Hassan Khataf, who is a data science PhD. Um, we have Human Resource Director, who studied human resource management, and we have
It's okay. You don't need to tell all, but overview. What is strength you feel in the board? there are two ways. One, we are revising to see if you remember. Second is what it tells us. For example, we have somebody in research, then we can think as research is our strength. We can invest in R&D, we can take it forward. We have somebody from mechanical, we have somebody from data science, like that. What can be the strength, what we are lacking in the board?
So as discussed, we have only three non-executive directors in our board, and it's not something that that is necessary to have equal number of non-executive directors, but still it's considered good that if we have equal number of non-executive directors. So that's the weakness of the board. And also, considering the strength, we have diverse board. Like, we have people from all kinds of backgrounds, and they have worked in different industries, so they understand different industries and how it works. And when we have to deal with different customers and approach them, all this knowledge that this board has, they can include while dealing with the customers. So that's quite good for us.
All right. Okay, good job. Thank you, Aditi. So we'll continue. So basically, we have to see everything, from the SWOT analysis. We have to see it from a special project perspective. Even special projects which we will take, we'll try to do something which is relevant, something which is has lesser risk, something which is within the ecosystem. Best example we can take is Apple. Apple have their iPod, mobile phones. Now they have got their VR. They are special projects when they do first time, but ultimately they are creating an ecosystem of that. And directly or indirectly, all these products are related. Okay, so every time you read the pre-scene, you'll get some idea. And from there itself, we'll get our special projects also. We have to still do the financials, but before going to financials, I just want you guys to talk a little bit about board of directors. Last class also we did, but you guys were not prepared. Simple question: how we can improvise the board? This is a very commonly asked question. Okay. First thing we have seen is there is a weakness. There is no balance. We don't have equal number of entities. Second weakness we saw is the chairperson Sudhakar is sitting in audit committee. That is also not according to the best case. In fact, it can raise a lot of concern. Then also another weakness we saw is we don't have a IT director now. We are so much into technology. We are making robots. We are working on automation, and obviously technology is one of our strengths. So we don't have a CTO at the board level. Yes, we have it at a senior management level, but we don't have it at the board level. Okay. Some points we have discussed last week, but again, I want you guys to add some more. George, Akhilesh, Vinithya, can you guys try?
I think one thing you can point out is we're not really told about the term limits for the board, and if directors end up staying too long, this can jeopardize the independence of the board.
Okay. Let's say you got a question in exam, is 60 or 70% question. What are the current issues at the board and how you can improvise it? Or what are the areas that need improvement? And 60 to 70% question. Let's say 70%. 70% means you need to write, almost 7 to 8 paragraphs. That can go 1.5 or 2 page. So what are the 7 issues you will talk about in that? In the last class also, I told you to come prepared with this.
Misbah, I think broadly we have covered everything. If you look at board, First thing is that how we are engaging with strategy as it's forming. So when it is forming, what's our strategy? We spoke about on talent. Then we also covered engaging the field. I mean, from how specific operational areas, how we will engage, what kind of a talent we will have. So these are three broader heads. Now under these, and of course the fourth is the governance, that how we are structuring the governance of the board, and the governance of the board should fetch efficient results. So these are four broader heads we need to look at from improving the efficiency of the board. Now under these broader heads we can put I mean as much points as we can.
All right.
We can also talk about the cost that will incur if we balance the board, because at the end of the day it's a company that aims to make the profit and still work like smoothly. So I think we can say that we want the board to be balanced, but at the same time we have to consider the cost if we are ready for it or not.
Right. Also, what we can do is when we are doing special projects, from that we can get certain skilled people. For example, if you are doing a new project and we don't have a qualified member at the board, so accordingly we can get a NED or executive director, mostly NED in this case. So I want this to be in written. Last time also I told, today also I'm just repeating, make a SWOT analysis of the board and make SWOT analysis of the entire company. I'll just share now. Actually, I forget to share on the group. I'll share it and you can just have an idea from that. Okay, make it in writing, otherwise you will forget. Vinitya, you have certain points that we are lacking balance, then audit committee has a non-executive chair.
So I just went through the pre-scene ones. From what I went,
It was there in a lot of other pre-scene also. This is normal issue. CIMA test in the SCS.
yeah, I also noticed that imbalance between the board and the lack of an IT director, but I didn't get into depth. I'll have to look into it this week.
Okay, no problem. Going forward, we have discussed the risk. So you guys have to come up with 40 to 50 risk for our company and how to mitigate that. I'll give you an example, but you have to work on your own. So this week you have a lot to do. In fact, last week also I talked about risk. I don't know if any one of you has started. And just to tell you, the exam have been preponed. It was in 4th week of November usually, but this will be on 3rd week. So we exactly have only 1 month left. Okay. And from tomorrow we'll do longer classes, at least 2 hours, 30 minutes we'll do. If required, we can add one more class also. I expect from you guys to finish all this as soon as possible. If you're just attending class or not revising, it can be difficult. And when you're revising, make sure you're making notes. Otherwise, you'll forget. Sometime you'll get a direct question where they're talking about what are the risks of going forward with this project and how to manage this. So we already have, make our assignments where we are finding the risk and managing it. So half of the answer will be ready. You just need to tailor it according to the requirement. Sometimes, in fact, the risk will be the one we have already predicted. So you already know 100% of the answer, or at least you can say 90% of the answer. 10% you need to change according to the requirement. Same goes with the stakeholders as well, when we are talking about the stakeholder management. Okay. So now we'll start with the financials. So in financials, what we need to do is Basically, I hope you guys are aware there is no calculation in this exam. Then why you need to know the financials? So as a board, we have a CFO, through him we are going to board. He will understand, but other people, they won't understand, right? So what we have to do is we just need to show the numbers. When they don't understand means they'll have a better idea. They'll be able to read the financial statements. Usually they are trained for that, the directors, whichever background they are. Okay. So calculation is not there, and we don't need to go in detail where this revenue is coming from or what is this operating cost. Strategic wise, whatever is important, we need to focus. Okay. So primarily what we do, a basic analysis to understand the financial statement is do the ratios. The same thing we'll be doing, we'll do the ratios. I just shared something on the group where all the ratios have been calculated. But what does that ratio means? That is also equally important. What does it tell us? Okay. For example, when we'll be talking about the feasibility of the project, feasibility talks about the resources, and finance resources is one of the most important that we'll see from here. Okay. Another thing is we have data which is for the year 2022. Now we are in 23 and that is also coming to end. So when you're writing your answer, don't say our revenue was or is this much or cash in hand is this much. No, it was almost a year before. Definitely things might have changed in the 11 months now. So you can use these numbers, but don't say that it is today's or it was just last month. You can say it was in the last closing date. And when we are talking about anything, you can say approximately that or around that. Okay. So if you start with the revenue, we have seen a decent increase in the revenue. Okay. One good thing is they will also give the analysis of one of the competitors from that country. Reason being, if we know the competitors, we'll understand how the industry is also performing. Sometimes what happened that both the companies are performing good. That means there is competition, but they are still doing good. So the market is not saturated. Sometimes what happened, both are doing bad. So maybe there is some external risk which they are facing. Let's say geopolitical issue, economic risk, like that. Okay. Now, if you see, there is an increase of revenue which can be approximately 7.5%. Okay. You don't need to remember the number, but you can say there has been a growth. Now we can compare this to our competitors. What was their growth? Okay. And what is the predicted growth? Usually it will go more into management account. Operating cost. Firstly, we have to understand what kind of operating cost we can have. So remember, our business is facility provider for the warehousing. We also do consulting. We also provide service. Once the facilities have been made and given to them, they still need a backup. So we are giving them backup support. What can be the operating cost for us? Can you tell me quickly? What is the basic operating cost?
COGS.
Sorry?
Means basic operating cost is cost of goods material, which will cover the most of it.
Yes. Though we are service also, but primarily we have we are selling a lot of things. So we'll have cost of goods. Okay. What else? What other type of operating cost we'll have? We might have data centers, right?
We might have cost of maintaining the machines that we use to maintain the warehouse.
Yes. We might not own the place where we are working. We might have their rent, right? There are a lot of things, even basic, you can talk about the travel, logistic cost. We can talk about office supplies, the hardware we need, not for the clients, but for our own maintenance. Maintenance itself, and many a time we might also outsource some part of maintenance that is required. Repairs are there, office supplies are there, salaries are there.
So this will all aggregate as a selling, general, and administrative expenses. So advertisement, other things, all those of apart from COGS will be part of this, Misbah.
Yes. So now one thing we have to remember is, even if they don't ask directly, we are part of finance team. We are heading the finance team. We are just below the finance director. Always we have to see how we can improvise on the profit. How we can improve profit? There are two ways. One is improving the revenue or sales, and second is reducing the cost or expenses. So if there is a possibility we are able to reduce the operating cost, therefore we have to dig in deep to the industry and see in this industry what are the major operating costs and how we can mitigate that. For example, we might use chips. Okay, I'm assuming automation, maybe they are requiring chips. Then if you have good control over the supply chain, if you have better relationship with the supplier, we can get a better deal. Or if we need certain type of other raw materials which is common across, when we are making shelves, right, we might need steel, we might need other material. If it is possible, we can acquire that company as well, because we are such a big company, almost 70 years, isn't it? So if we acquire them, then also our cost will reduce, plus we'll have more control over the supply chain. If we just improve the revenue and our operating cost also keeps on going up, then there is no benefit for the company, or minimum benefit for the company. However, in this case, if you see, the operating cost compared to revenue has not gone up to that extent. Then operating profit has increased. Then finance cost. What is finance cost? Primarily, it is the interest you are paying towards the bank, the debt. This has not gone up. Usually, it will go up every year or sometime go down as well. So this means we have balanced it. This will affect our gearing. This will affect our future ways of funding. Now we have companies now, like we have Adani in India, and they are doing business globally as well. They are focusing more on debt. They're using a lot of risk by raising extra debt, and they want inorganic growth. They want quick growth. But at the same time, we have Reliance Industries. They don't want loan. They are giving equity ownership, and they want to get rid of loan, because loan will come with a lot of covenants and it can have its problem. Because if companies want to take extra risk, bank will not allow it, or it will be part of the contract. So we have both the example, but ideally the mix should be good, because we can have the tax benefit for it.
So
Then
these
we
are-
have tax. Yeah, sorry.
So these are all non-operating costs, Misbah.
Yes,
All
yes.
the finance costs.
Finance cost is usually the interest, as I said.
Yep.
They have not given all of that in detail, just basic, because as I said, calculation is not here. Then tax expense, we cannot do directly anything with the tax. Tax will go from the percentage. If profit increase, obviously the tax will go up. So profit for the year has gone up from 1516 to 1875. If you just see this in terms of percentage, it will be, let me calculate, 1516, almost 23% increase, right? We also have ratios. Operating profit is 22%. Yeah. So you can just talk about how our company is performing good and where you can use this data. Imagine there is some company who is trying to acquire us, and we need to give confidence to our stakeholders. So we can say our company has seen growth year on year basis. If you compare to last closing of 21 to 22, we have made about 20% growth in our net profit. Okay. However, our share price is not doing good, because share price is also important. Usually, as a shareholder, what they will look, two things. One is the share price, second is the dividend. And dividend is obviously given from the net profit. If company wants, they can give this entire 1,875,000,000 as a dividend. So the more it is, the better signal it is. So we are not performing good in terms of shares, right? Shares we have already seen. What was the last closing share price? Did you remember? It was close to 100 $. So last month our share price was 100 $. We can also look it in a way. For example, when the books close on 31st December 22. So if you see, we have for 22 November, that time our share price was approximately 110. Can we say 110, 115? But now it has come down to 100. Okay, now if you talk about statement of changes in equity, here the most important part is how much reserve we have, how much dividend we are paying. Okay, opening balance of share capital, we start with 1,000 million. Okay, or we can say 1 billion. Then we have retained earnings. Retained earning is very important, because when you want to finance something, the first option or easily available money is what? It is our retained earning, right? But also we need to be careful that retained earning is not equal to cash. Retained earning equal to cash? Can you say that we can use all this amount to acquire certain businesses or invest somewhere? No. Maybe some
Misma,
part of that. Yeah.
you're using competitors statement.
I think I came down. Sorry. I'm back. Thank you. Yeah. So competitor was actually better than us. Okay. So what I was telling is, even our retained earning is very similar. So retained earning is not equal to cash. So when you're recommending something, we can say some part of this 9,296 million we can use, which is there with us. But usually what we have is a cash. Okay. But companies like this have a very high working capital. We need a lot of operating expenses. So retained earning should be there. If we add this, we are having even more, but we have paid a dividend of 426. But if you talk to the percentage, it will go, what is the percentage? Dividend cover is 4.44 times. Okay, let me calculate once. You can just do 426 divided by 1875. It's coming to 22.9. Now, can we conclude this is good dividend or not? It all depends upon the industry. On average, companies are paying around 30%. Profitable and matured companies, they pay around 25 to 30%. But again, it's industry to industry. So from that, it looks little down. Okay. But there are companies whose share price is going down, so they want to pay very high dividend, almost 80-90%. We have seen previous companies, they are paying 80, 85, even 90% dividend. Why? They just want to keep the shareholders happy, because their share price is not doing good, and even if you are paying very less dividend, they won't have any kind of hope. In fact, there was one Indian company, Vedanta, they took a very big loan now just to give the dividend. A lot of people are questioning that strategy. But the directors knows, they are very clever. They are doing this business for very long. They understand if the share holders are not happy, it can be a problem for the long term. So this will be a strategy, and this can be very, very important. In fact, again, it's a very commonly tested topic. Okay, we'll see this in F3 textbook revision also. What are the dividend strategy we have? Shall we pay higher dividend? Shall we pay lower dividend? All of those. But for you, you remember the percentage. This can be important for you to justify your answer. Then we have currency reserves. So currency reserves, or when you talk about translation, this is not actual gain or loss, because you have a currency in different, you can talk about assets in different currency, like we have in other than Tesla. So many times the currency will fluctuate. Actually, we don't have any gain or loss. This is just the translation gain or loss. So overall, we have 11,453. So two important number to remember here is 426 million. That is our dividend, and the retained earnings we have. Retained earning is how much now? 10,745, or we can say 10,745,000,000. All right. Also, we need to see what the competitor is paying. If I just quickly go to their dividend, we need to compare others also. They have paid 583. So this competitor is also operating in the same country, and the dividend again look very similar. 2674. They have paid 21.8% dividend, and we have paid around 22% plus. So almost similar. Many times it can be a industry standard also. Okay, can you tell me what can be the advantage or disadvantage of paying low dividend or industry average dividend? If you think from shareholder perspective, imagine that you are a shareholder of RB. What would you accept? What is your expectation?
You see, Visma, my personal opinion is that it should be seen from both the angles. Now, low dividend payout is that company might be doing well; they are retaining a big portion of their retained profits. So it's not always that if they are not rolling out a big dividend for the shareholders, there's some structural issues. I mean, that's my perspective, but happy to hear other people as well.
So you see this as a positive.
See, if there is a volatile environment, I mean, there is high risk around. It is better to retain the cash rather than doling out a big dividend.
Right. Yes, that can be one reason. So we don't know a lot of external environment. They don't talk about that. However, at the same time, one bad news we have is the share is not performing good, or it's not showing decent growth. In fact, it has been a downward trend.
Yeah, that's correct. In this scenario, correct.
Okay. Others' opinion, please. Remember one thing in discussion also now, and even your exam questions. Even the questions what they will ask is very similar to what type of discussion we are doing. There is no thumb rule and nothing is right and wrong. It's not numbers or calculation we are doing. This is also a strategy. This is also financial strategy. Some company will say we'll pay zero dividend. You just sell your shares when you need the money, and they'll make sure the share price are going up. So shareholders can just sell and get the profit. Other companies will say, share price will grow very slowly, but will keep you keep you happy by giving the dividend. Or some companies will say the share price will be fluctuating, plus we can't pay any dividend because we are into growth stage, or the market is like this, or external situation is like this. Everything is correct from their perspective because it's a strategy. Now, if we talk about which one is best, what will keep successful, everything is trial and error from company perspective, because every company want to go and get the lion's share in the market, the biggest share in the market. But some of the strategies will fail, some of the strategies will be successful. As a student, we can talk about from either ways, but make sure we are not messing up with the fundamentals. Imagine company doesn't have money, then we are taking loan to give dividends. At the same time, our share price is not doing good. We don't have retained earnings, and we are into the industry like RB, and we have a heavy working capital. With the heavy working capital, we are not retaining any earnings. So that will be against the fundamental. That will be one thing which can lead to failure. So we have to be very careful. And these points you need to touch in your answer also. Justification is important in CIMA's answer. Some of you can say, this is wrong. Okay, explain why. Some of you will say this is perfect. That's also correct. And when you're justifying, you have to talk about the industry, you have to talk about the example, you have to talk about the shareholders need, you have to talk about the the share price. One thing here is they don't give last year's dividend payment. If you see above, they have talked about last year revenue, but they have not talked about last year's dividend. So we don't know, is this a trend we are following? Sometimes what happened, no, especially when they give very high dividend, 80-90%, or sometimes very low dividend, that may be also one-off dividend. What is one-off dividend? Only for that particular year they have been paying that. Usually one-off dividend is very higher. Instead of just keeping the cash idle, if they don't see any good opportunity, company can say, okay, just give it back to the shareholders. Okay. Yeah. Vinitya, what do you think? What strategy is good for dividend? Vinitya, can you hear me? Okay. Others, can you hear me?
Yeah, can hear you.
I can hear you, Misbah.
Thanks. Okay, George, what's your point on this?
I think, well, I think what I was thinking about before is the fact that we don't know enough information about their previous dividend policy. But the one thing that I would say is that in order to create the perception, or at least to appear stable to the market, they may desire to pay a dividend. Now, paying a dividend is useful because it obviously keeps the shareholders happy, but it also signals that the company is doing okay, and that can create a positive, a bit of positivity around the company and the market, and this positivity can be used to attract more investors. This same positivity can be used when speaking to other stakeholders, such as financial institutions. Now, I know the current position of Robobryce. We haven't looked at the balance sheet yet, but I looked at the level of debt, and it's quite high. But if that was something if they were looking to go down that path, then they could show that they're quite stable. So I think to summarize, I think being in the position that they are and paying a stable dividend amount each year will obviously have an effect to the direct shareholders, but also it will create a perception of the company in the wider market.
Right. We don't have enough information. We only know the competitor, how they are paying. If you just look at this new screen, we have certain ratios here. I want you to go through this later on also. But quickly, if you see the dividend cover is 4.4 times. And even for a competitor is 4.6 times. That means, there may be a situation in the market where raising finance can be difficult. So companies want to use their own money for the investment. They want to use the retained earnings for the investment. That may be one of the reason why they are just paying around 20%. Also, at times, sometimes the covenants will be there from the bank that you should have at least 3 times the dividend or 4 times the dividend. You cannot pay more than that. But usually about 3%, about 3 times is considered safe. Okay. Then we have gearing also will come to it. Finance cost is 10%. 10% of the total we have. Interest cover, same covenant can come for interest cover. In fact, the banks are strict with this. So we need 3%. 2.5 to 3% is considered good. Okay. If it is less than 2.5, it can be considered risky for the business. But still, overall, if you see, the amount of finance cost is very high. It's almost 33% of the revenue, isn't it? That can be risky as well. Now, gearing, if you talk about gearing, usually we have to use the second formula, that is D by D plus E. What does gearing means? is simply mixture of debt and equity in the capital. Second formula talks about debt divided by debt plus equity. This comes to 49%. 49%. It was 52 and it has reduced to 49. Again, it depends on the industry. There are certain industries which are very less geared, 15, 20, that's the average. And there are certain industries, if you talk about banking, they are up to 90% geared, even more. But by the thumb rule, anything less than 50 is considered good. But if you go more than 50 or around 50 is considered risky. In this current situation, I would say we are very close to being a very risky company in terms of debt or financial risk. Anything more than 50 will be considered high risk. So we have been successfully reduced from 21, but again we need to reduce. Usually in this type of companies, if they ask either we should go for debt or equity, we recommend to go for debt because gearing is around 25, 30. But now it is approximately 50 now. And in fact, we reduced from 52 to 49. I think going by debt will be quite risky. Or we might have to think about debt and equity both. We'll discuss this question again in detail. This is very important and very commonly asked question again. Either you should go for debt or equity, or even mix of both. Because when you are having 50% as debt, then it can be a big problem. Banks will definitely have strict contracts or covenants, like interest cost should be 3, or they can put a thing on dividend. They will not allow company to take risky projects. Sometimes we'll do special projects that is very fruitful. We are expertise. But if the bank think it's risky, then they won't allow us. Okay. Even if you look at the competitors also, they are again similar to us. They have also reduced from the last year, but again 52.1%. That's high as well. Interest cover is also 3.2, but finance cost accidentally is exactly the same, and even the dividend. So overall, the company looks a similar level to us. That also talks about we have a big competition in the country itself. Okay. At the same time, there is difficulty that we can acquire this company or they can acquire us. Reason being, both are very big companies. So usually if they acquire each other or even go for a merger, the competition authorities won't allow us, because according to UK law, anything goes more than 25% can be a problem. It can create a monopoly in the market. So one by one, look at all the ratios and try to understand what it tells and how it will affect your financial strategy. And when you talk about financial strategy, it will be linked to your overall strategy. It will be linked to your risk strategy. Everything is connected. Even if they ask you specifically about gearing or your dividend payments or what kind of investment to use, it will cover other areas also. So your answer should be holistic. It should cover all the points. And primarily think about the stakeholders that it's affecting. Okay. This can even go to the board of directors. For example, we have one of our board of directors who is part of or who used to be part of the bank. What is his name? Economic background. Nina, our non-executive chair. She was a chief economist working with a major bank. I'll just take you to that. Right? So we can take the experience of her into consideration, or she can take the lead when we are negotiating with the bank, when we are making a strategy to reduce the debt, or in case you want to go with debt again, she can be the one to guide. Because one thing is for sure, when we'll go for debt again, we'll have to pay higher interest. Why? Because you've already taken enough debt. But make sure you mention this person name. This should be the part of the answer. Getting the point? Hello?
Got it. Hello, am I audible?
Yes, Akhilesh. Yes, you're audible. Going to the financial position, we saw the gearing already. So property, plant, and equipment has also gone up. So what kind of PPE we'll have? Can you name some PPE for our business? What we'll have quickly?
I mean, their own warehouse, production plant, if they own it, all those things will come under PPE.
Okay. Anything specific to us? It can be bigger machineries, manufacturing of the racks, of the forklift, right?
Yep, correct.
So we are a capital intense business. We are doing service and production both, but most of that is part of production.
Correct. Correct.
So this has gone up. It's a good. It can be said as good sign for the business. It can be look at it anyway, or sometimes it's just the appreciation of asset. But usually companies take book value, so that's not necessary. Okay, because companies can have strategy. One primary question they do is lease versus buy. Either you should buy it or lease it, because there are certain assets which will depreciate very fast. Then company will say, okay, let's lease it. Or there are certain assets where the lease price itself is very high, so they'll go for buying it. Goodwill has remained the same. So goodwill is an intangible asset for the company and very important for us, especially when we are providing service international. Software development cost, this is also an asset. Software development cost, usually it's also part of intangible assets. So company will spend a lot of money in R&D, and many a times the things will not be successful. If it is not successful, that will go as expense for that year. But when you are able to get a patent or something legitimate has been taken out of it, then it will be part of a non-current asset. That is the software development cost, and this is very important for us. Nowadays everything should be controlled by the software, should be controlled by using the computer or a centralized monitoring, as we have seen. Current asset, so what kind of current asset we'll have?
Maybe plastic, different materials for manufacturing the forklifts, metals, and maybe the material used for the shelving as well, depending on what the material is made from.
Okay. So they have talked about inventories. Obviously, inventories can be the raw materials which we are using. And many a times, these raw materials we might be getting from different countries. Let's say we are getting steel from China. Excuse me. So due to the excuse me, due to the supply chain issue, we might get it in bulk or we'll get bulk discount. Again, companies need to decide, shall we get it in bulk? But if you get a bulk discount, you have a problem of warehousing it again, keeping it for a longer time. Especially these things can get rusted. That is one of the inventory we can have. Then we can have other type of inventory. Inventory can be some part of vehicles or some maintenance. If you're providing maintenance, we need to have a lot of backup for that as well. Okay. Then we have trade receivables. That means we are doing some in credit as well. Usually B2B business is credit, right? Trade receivable going up, in some way it can be look positive, in other way it cannot be positive as well. Why positive? Maybe the increase in revenue what we have seen here from 13 to 14, right? More than 100,000, more than 1 billion. That may be because of the trade receivables, or maybe we have given that in credit, and if you give in credit, usually sales goes up. Next is bank. This is actually the cash we have. I mean, we had last year in 2022 amount of bank. So this is a very, very small. I don't think it can be used in any type of investment or all. However, there has been a increase in that. All right. Remember the cash bank or cash at bank also we can say. Trade receivables, we have to discuss about the strategy. Okay. Also, it depends on the industry. In FMCG, if you see, it's very common to give credit. So if it's an industry norm, we cannot do much. We just quickly see for our competitors, their trade receivables has also gone up. And they also have similar amount of trade receivables. Right? Maybe that's a industry trend. If everybody is going in the market and if we don't, can also lead to a problem. Equity is a share capital. What we have, the value of shares is 800 million. Currency reserve has they're showing in negative. Again, it's in different countries, just a translation. Retained earning has gone up. Retained earning is not equal to that, but we might have some good amount of money, at least say 20%, 30%. Even if you have, that can be used. The first way to invest in anything is the retained earning, and especially if it is a small expense or increasing operating expense, even a small capital expense, this can be the first thing. Why? Because you don't need to go to shareholders for rights issue. You don't need to go to banks for raising debt. Liabilities have been same, and because of this, our finance cost is also the same. However, it's a very big amount, right? We need to think of it, how we can reduce it over the time. It's showing that our gearing has gone down, but the liabilities or the borrowings remain the same. So maybe our equity is also reduced. Then current liabilities, trade payables have also gone up. Receivables also gone up, payables also gone up. So maybe again we are also taking things on credit, and also it affect on the accounting we are using. Okay, tax liability has gone up. Tax we have already paid, but what is this type of tax? This can be indirect tax also. Like we have VAT, we have GST, all of this. Overall, from the last year, company has seen growth in the PPE majorly and the small changes in the receivables and payables. Okay, let's go to the competitor now. RB is one of 6 major companies that compete for the design and implementation of automated warehouse system. AWS. 6 major companies. This can be important because maybe there is a merger or acquisition happening, but as I said, it cannot be possible between 2 big companies. Its most direct competitor within this market is PowerBot, which is also based in Tesla. PowerBot's manufacturing interests are restricted to autonomous products such as car cells and mobile robots. They're restricted. That means they don't have a variety of products what we are doing. But still, if you see their revenue, their statements, financially they look similar to us. So what they are doing to car cells and mobile robots. Mobile robot is must nowadays if you are providing the warehouse service. The company does not manufacture non-autonomous products. Are we doing non-autonomous? Yes, we are doing. We're getting more business from autonomous, but still we are doing non-autonomous. Why? Firstly, there is still demand of it, and this demand is coming because it is comparatively cheaper. Indeed, it's sometimes specific RB shelves when it design client warehouse. It sometimes specifies RB shelves when it design client warehouse. So they are, kind of suggesting us because of a brand. Maybe a strategic alliance can be possible in the future. RBs and PowerBot frequently bid against one another for warehouse contracts. So these are major competitor. When we talk about understanding the competitor, tracking the competitor, see what strategy they are coming up. So these are the first one. But unfortunately, we just have this much info, only the financials. Others they have not given. Even they have not mentioned it's a listed company or not. But we can, assume it can be listed in most of the cases, looking at their size. Revenue has again gone up. So basically, finance is very similar to us. Operating profit again gone up. Even if you see their operating cost is going up with a similar percentage. Tax expense has gone up with the profit and profit for the year as well. So competitors, you don't need to remember the numbers. The ratios what I talk about is primarily for our company. This is only important to see if there is a growth. So this shows us one thing, that is a fact, there is opportunity in the market. Very rarely it will happen the other companies going down and we are going up, or both are going down, as I said. And also it tells us what is the industry standard. Again, for industry, we can see real world companies, but we can say industry within Testland. Out of 6, we have got data for 2 major companies. So it's good to assume that this is the type of market in Testland for this industry. That means the warehouse is growing. In Testland, the warehouse is growing. That also talk about e-commerce is growing. People are more comfortable ordering online, right? The real estate is also growing because directly, indirectly, this is growing. I mean, this is related. Logistic is growing. So they are part of the ecosystem. And if this specific industry or business is growing, that means you can assume the entire ecosystem is growing. Now, if we go to their statement of changes in equity, opening balance, again, similar retained earnings. We also have similar amount of retained earning. Profit was also very similar. Dividend, they have paid slightly more than 21 in currency reserves. They have also seen a negative in translation. Maybe they're also doing in the same country what we are doing, Darland. There is a possibility, but they have not disclosed, but it's possible. Because obviously they will also do this to save the expenses, and that might be a good opportunity, right? Going to their non-current assets, their non-current asset also gone up. As I said, it may be due to re-evaluation, or maybe they've acquired some more asset. I think assets are very important in this business, because as we grow, we need to manufacture, and we need to manufacture means we should have our own plant in most of the cases. So every year, companies' property, plant, and equipment should go up technically in order to improvise on the revenue, or in order to satisfy the demand. Goodwill remains same, just like as software development cost slightly increased. Inventories have gone up. Receivable has gone up. Bank has gone up. Very, very similar to us. Share capital is same. Currency reserve, we have seen maybe due to translation. Retained earning has increased. Very similar retained earning. We also have 11,000. Borrowing is the same. What was our borrowing? 11,000, right? Their borrowing is high. That's the reason their gearing is higher than us. Their gearing is 52%. One time they asked a question in exam saying one of the directors from our competitor, like in this case, this company, wanting to join us. Shall we give that person a position in the board? Because that person was a part of board member. So it will be tempting for the company because they can get a lot of insider information, but at the same time, it will raise question about ethics. Sometime they will link it to finance. Maybe the director came here, the company was not performing good. Is it due to the heavy borrowing? Is it due to mismanagement, or they fail to manage the stakeholders? Anything. Current liabilities, trade payable has gone up, so as receivable. Tax liability will definitely go up with the profit. Nothing much from the competitor side, very similar. Only 2 to 3 things are important. First, revenue growth, both have seen. Yes, that means industry uh, or the section still has good demand. First. Second, we can talk about the dividends. They have again paid very similar dividend. If there is a major difference in dividend, we can think of it, maybe some issue. Okay, because the competitors, the shareholders, sometimes shareholder will immediately compare to the other leading company or in the same industry how much dividend they are paying, or maybe we might have shareholders which is part of both the companies. If there is a major difference, they'll switch to our competitors. I assume their share price should also be similar to us. I'm just guessing. They have not given that details, but that's possible. So just take 2 minutes and go through this numbers, the calculation. We'll discuss this again. Okay, I've shared this on group also. You can take from there. Yeah. Hello.
Yes, Miss Bhai, yes.
Okay. I hope you have gone. So what is important here is they've talked about capital employed, return on capital. This is okay for our understanding. In strategy, this won't relate directly, but indirectly it can be helpful. For example, if you're talking about capital employed, so capital employed has increased. And why you want to increase the capital employed? Because the higher the capital employed, the higher they can contribute for the manufacture. So that has gone up. And if you look at return has also increased. Asset turnover, how much we are utilizing 0.7 times. This remain the same. We have to see how we can improve. Operating profit has gone up because different stakeholders will look at different ratios. For example, we have discussed about shareholders. Shareholders will look at which ratios? Dividend ratio, DPS, it is known as dividend per share. Then they will look at earning per share. Also, they want to see year-on-year growth. Then the second stakeholder, if you talk about banks, what banks will look at? Banks will be very much interested in your gearing ratio. Reduction in gearing ratio is good or bad from the bank's perspective?
It's good.
It's good. Obviously, they'll be happy that gearing has reduced. Then banks will also look at our property, plant and equipment because these non-current assets usually used as collateral. Hello, Ray. Can you hear me?
Yeah.
Yeah. So
I hear you. Yeah.
okay. So the ratios, what we are discussing, we have arrived that they're using the formulas. Okay. For example, when I'm talking about the gearing, it's here actually. So if you look at it here, the gearing formula, there are two formulas for gearing: debt by equity and debt divided by debt plus equity. So generally we use the second one. So our gearing
Okay.
has reduced from 52 to 49%.
I got, yeah.
And how we got this debt equity ratio? This we have been given in the pre-scene. If you just add all your capital, you'll get this 11,453. And this debt that they have given as a borrowing in the financial statements, right?
Okay, good. Yeah, good.
Yeah. So what I was saying is, we've talked about shareholders. Now coming to banks, bank will be interested in your gearing. Bank will be interested in your profits also. Profits, everybody is interested. Then banks will also be interested in your non-current asset. If non-current asset is going up, what collaterals you are giving? Okay. Another thing, if you talk about the suppliers, we are an important part of supply chain for other businesses, but at the same time, we'll have our own supply chain. We need raw materials, right? When you're making robots, we need, let's talk about the chips. Chip was in news recently because of geopolitical issues. The supply of chip has been affected. Like what's going on between Taiwan and China. Taiwan is one of the hub for manufacturing the chips, and that is very important for making this autonomous products. So that is important part again for us, or we can even think of backward integration. Backward integration can be one way if we can able to solve this issue. But anyways, if we are limiting to the numbers, in numbers that the ratios, they will look the suppliers. Every supplier wants the business to go for a long time so that they have some continuity in their particular revenue. And same thing, we at RB will also do, we'll look at the finances of the clients. Let's say we have clients like Amazon. Amazon is one of the industry leader, but we can have other clients also. Are they able to sustain? What is their profit level? What is their growth level? one thing we can understand for sure is the entire industry as a whole is growing. The ecosystem for this, the supply chain part, like logistic, we have talked about warehouse construction. In the last class, we have seen one small documentary also. In that, they are talking about how warehouses are taking over US, and that case is not limited to US. Even in other European countries or even developing countries in Asia and Africa, there has been a lot of warehouses coming up. Why? Because that has become an important part of the supply chain. Companies are now moving or already moved to just-in-time approach using minimum inventory, but at the same time, there are companies who don't want to take risk, or they want to take minimum risk. So essential goods they want to keep under their control or keep some amount of inventory for that. It also depend on the cost versus benefit, because if you are keeping some inventory for a longer time, you will have the cost of keeping that inventory, maintaining that. But at the same time, companies can get bulk discount, so they have to just see the risk versus benefit analysis. Okay, so these ratios will affect different stakeholders in different ways. Gearing we have talked about, it has reduced, it's a good sign. And as I said, as a thumb rule, anything around 50% or plus is considered more risky. So again, if you go with the debt option, it can be a problem for us, or it can raise the interest rates. Then dividend cover is good, 4.4 times, but the problem is by percentage it's not very promising. Why it's not promising, or it should not be looked in a very positive way by the shareholder, is our share price is not performing good. Our share price is around $100 now, which was very good almost a year and a half before. Got it? Then we have information about the competitors also. They're also doing very similar. Their gearing has also reduced, but they're above 50. You don't need to remember the ratios for the competitors. They have given some basic explanation also here. Okay, if I just go through the main points, it would be preferable to measure gearing using market values, but without knowing the number of shares in each company, that doesn't seem possible here. So most of the information here is on book value. The calculation itself is on the book value. It's assumption. Then it is interesting to note two other issues related to cash and financing. The amount cash held by RB is extremely small. This we just discussed. This is extremely small. If you compare this to revenue, if you compare this to profit, this is very, very small amount. This cannot be used anywhere, even in working capital or operating expense also. This is of no use. So one way to improvise this, we should have more money at bank or cash at bank. But at the same time, some companies can put a lot of cash at bank. This will have its own advantage and disadvantages. That can be a strategy also. For example, some companies want to keep a lot of idle cash. This can be used to acquire another companies or to get a better deal, because usually when they go for cash, they'll get a cash discount, isn't it? Or sometimes it can help us in any other special projects or acquisition or mergers, right? But at the same time, this can be a problem also. If let's say a company has very big amount of idle cash, so other competitor might think, or any other companies who is struggling with their working capital, who need cash immediately, and they are not able to raise it from the market, they'll acquire this company just because of their cash, and they don't need to pay cash again to acquire them. They'll do share for share exchange, and they'll get the cash for their survival. So everything will have its upside and downside. Then another important point they're talking about, the value of property PP is lower than existing level of borrowings. This is a very important point actually. So if RB wanted to borrow more money in future, it might struggle to find assets on which to secure the borrowing. This could push interest rates up. So now there are two problems to raise the debt. First problem we have discussed is we are already high. Second problem is the borrowing is actually higher than the value of the asset we have. Then we don't have collaterals to give, and unsecured loans are expensive. Please write down this point. This is very important. Raising finance question is usually asked. Okay. Then interest cover and interest rate. Interest cover was 3 times. The similar figure is for them. Interest for RB constant at 10%. Okay, that's not a big issue. Dividend payouts. Okay. Dividend payout, unfortunately, there is no prior information. Okay. But listed companies normally attract a clientele of shareholder whose needs are met by the dividend policy. So we'll see this in detail also when you're doing F3. But usually a company, let's say, paid 22% now. Next year also, the shareholders will be expecting something similar, or maybe slightly higher. 22%, it can be 23%, or it can be 22.5, or a slight increase in the amount according to the inflation. Because whatever they do will give a signal to the market. And in fact, it will affect the types of shareholder. Okay, just think, for example, now all of you guys are working. So you'll invest in a type of company which is into introduction or growth stage, because you don't need a stable dividend now. You're ready to take risk. Why? Because you have other source of income. You are working, you are surviving. So you'll invest in a growth company which can grow very fast. You'll get the share for lesser price because you're accepting risk, and you don't look for a immediate dividend. But if you compare this to a retired couple or retired person, what he or she will do, they'll invest in a company where they can have stable dividend. So they'll go for the matured company. So directly, indirectly, you'll create a clientele or group of people who will invest in that company. Let's say we have majority of our shareholders who are retired people, who are dependent on this dividend for their living expenses. Then you can imagine how much it will affect them if you avoid the dividend. Let's say you say this year there is 0 dividend. Then how they'll survive? At the same time, you have people who are working and who are not dependent on this type of dividend to survive. So they don't want dividend. They just want company to invest it back. They are looking for long-term gains. Again, we don't have information for that, but for understanding, we can assume we have mix of shareholders, people who are having mixed backgrounds. Okay. We don't have the data, or they have not disclosed, but directly, indirectly, with the time, we'll have that type of clientele. Everything we do will give a signal. And obviously, when company is into maturity stage, dividend is must. PB's dividend payment in 22 was very similar, 21.8. Firobot, you can say. Share price. Share price is important. I think a share price related question can be important for your exam, because share price is commonly tested. But again, in this, it's more important because there has been a lot of changes in the share price. Even dividends are not very high. So something we need to cheer up the shareholders. Okay, RB is a listed company. A graph of share price shown. Okay, it's how much now? 100. But from the peak of approximately 260, can you see? We are less than 50%. We have touched 260. I don't know why suddenly it came down. There is no information. There can be two reasons. One is something bad happened in the company or the industry. Suddenly the share price came down. Another reason maybe there was a lot of speculation and a lot of reasons which just give an artificial increase to the share price for the short time, and therefore it reached its peak. Now suddenly came to reality. Because when things are artificial or rumors, it will just go up or go down for a short time. But slowly the market will understand the real value. So as we are discussing, the gradually declining share price suggests that shareholders in RBs are not wholly satisfied, perhaps with the way the company is being run or performance relative to its competitors. We are not better than the competitors, despite we do non-autonomous also. I think we are into the industry from longer time compared to the competitor. They have not disclosed this, but as we can see, because very few companies were there. In fact, they have mentioned they were one of the pioneers in this sector, in the autonomous. So from that, we can understand we were before them, but the competitor have already catch up with us. We identified in exercise 1 and 2 about the RB is growing and looks to be profitable, but has very little cash and few asset to offer security for further borrowings. So the cash position is concerned. Firstly, we don't have enough cash. Forget about retained earnings. It's not equal to cash. Maybe some part of it is there. Cash is not there at bank. Secondly, we don't have enough assets to give collaterals. Yes, George. You want to add something?
Yeah, sorry, I wanted to add, you know, the note about that mentioned about the peak of the share price 2 years ago. I was just thinking about that and looking back at the board, and in 2021 there was the appointment of the non-exec chair, Sudhakar Patnaik, and also Eva Durska. So it could be that could have been a contributing factor. I mean, I don't know. We don't really know, but it's just more speculation on my part that could be the reason why the share price shot up.
Perfect. It can be. Because around 2 years back, we have got our chair and the CEO as well. Yes. Maybe because of that, it shot up, or maybe it went going down. If you see, after that, the share price has usually come down. Okay, they have not given the month. So maybe because of that, we changed the chairperson and the CEO. Maybe we have got these people towards the end of 21. Because usually when things are going good, we don't change the board or the, the leaders. Maybe, it was started to declining and we thought that we should change our CEO and the chairperson.
But I guess also it could be that the market had an inflated perception of the appointments, thinking that the appointments would achieve better than what the company had before. But then over time we can see the share price coming down, which maybe reflects the coming down of those expectations. I don't know. I'm just thinking out loud.
Yes. We have to think from every angle, yeah. And also, if you look at the share price, it was for not even a month, I think. You see, it's so slim here. Maybe we were even, planning to launch something, or there was a possible acquisition or merger is going to happen. It can be due to some rumors also in the market, positive rumors. Okay. In the answers also you can talk about it. Maybe that's the time we have changed. There are different ways to look at it, or maybe we just change and the share price start falling. There can be anything. So this looks important topic for your exams, in fact, because even your dividend is not good, the share price is not good, and we cannot raise money from from debt easily, and other option is remaining is shareholders. But now shareholders also are not very excited or happy with the performance. So in short, we'll be struggling to raise money. And do we need money to raise? Yes, immediately we need, because whatever new project we'll do or any big changes we want to do, we'll need money because we don't have retained earnings. So in short, we have three options. Or to conclude, first option is to use retained earnings. Do we have enough? No, we don't have enough. Secondly, the primary option companies use is debt. Do we have that? Not so favorable. Then the third option is going to shareholders for rights issue. Do we have that? Yes, but the shareholder doesn't look happy or satisfied with our performance. So all three places, it's not a good sign. So that will definitely affect our risk appetite also. Now the board will be very much concerned. They cannot take much risk now. They don't have enough to lose now. Okay. Then beta factor, we have already discussed about this. We are less risky than the industry. You don't need to know the calculation. They have given some SWOT analysis. If you want, you can go through this SWOT, but I want you guys to come up with your own SWOT analysis before. Because if you read from what they have done, you won't remember anything. You do your own SWOT analysis, then you come back to it. Okay. Okay, let's do a quick questions on this. I hope this is very basic for you guys. What is the mission of RB or Robobryce? What is our mission?
Growth of the business in a way that advances social well-being.
All right. So you don't need to remember your mission or vision or values word to word. They won't ask in the exam, but for your understanding. Remember what we discussed about the mission. Mission is a guiding tool. Mission is like a track to follow. Yeah. Then about the business, at what percent capacity might a warehouse operate most efficiently? So we have discussed that usually these people don't work at 100% capacity. Risky. Then what is the maximum capacity or where
90
we can
to 95.
90 to 95? Okay, good. And obviously we should know why it is. Okay. Next is the global market of AMR is forecasted to grow by how much between 20 to 28? This is again important topic. Just put it star. I am expecting a question to come on this. We'll discuss this in detail again. Okay. How much it is predicted? They have given a graph in the pre-scene. How many times it will go? Or you can talk about the number. It's given on page 11. If you want, you can refer the pre-scene. Even 23 is forecasted, so you have to look from 2022. How much it is? Hello?
Yeah, Misbah.
What is the forecasted global market for AMRs? AMR.
I mean, if you look at from 2021, they're saying somewhere around about 1.8, and it will go to close to 8.2, 8.3 in 2028.
Yeah. So from 2022, because 21 and 22 is already done. From 23 it is forecasted. So almost 4 times.
Yeah, 2.2, 2.3 to 8.3, 8.2, 8.3.
Approximately 4 times. So what it tells about? It tells us simply that there is enough demand for this. Okay. And the best part for us is we are already doing this. You know, when we do SWOT analysis, we want to convert our weakness to strength, threat to opportunities, right? We try for that. But at the same time, an ideal situation for any business is to have an opportunity which is focusing on their strength. I think this is what we have now. We have this as a strength. We are already doing it, and opportunity is so big. It will be 4 times in only matter of few years. So this can be, you know, one of our cash cow product or one of our major revenue source. But having said that, we'll have a lot of competition also coming in this sector.
Yeah, because see, if you look at both the categories currently, the world is inclined to induce intelligence to any machinery, Misbah. So apparently, what will happen? AMR's usage and consumption of intelligence-based machinery will definitely increase multifold in the days to come.
Yes. What is our beta?
Surprisingly, our beta is less than 1. I mean, it's very interesting. Just see.
Seriously, especially after looking at our financials, gearing and all. I mean, we have more debt than our collaterals. Maybe because of goodwill or other factors, beta should be higher in that case. Or maybe we have lot of contracts for the future. Because here, if you get into B2B business, many of you might have worked or understand that market. It's difficult to get the first time, but retaining them is comparatively easier if you satisfy them, right? Rather than going into B2C, because B2C, the revenue or the client value is very less. But in business to business, they are more sustainable. Plus, they bring in big amount to the revenue. So
Yeah,
maybe.
But it's showing that it's less volatile in comparison to the market at 0.91.
Yes, that's strange.
Yes.
Then next is very basic. What is the average area of warehouse in Testland? Are you guys reading pre-scene?
Yeah. I'll just give you the numbers.
Okay, others also, please. Harish?
1,500. It's this warehouse.
1,500 square meters.
Yeah.
So why we need to know what's the average size? You know, we have to understand that every client we are serving will have different needs. Having said that, still, you know, 50% or even more than 50%, we can still standardize our things. So when we are standardizing, we should know what is the average size of warehouse usually our clients have. So it will help us in planning. It will help us in management accounting a lot. When we talk about management accounting, our costing, budgeting, how much inventory to keep, all these internal strategies, this will be very helpful. Okay, then how many production staff does RB's employ in Darland? Only in Darland, how much we have?
7,000.
Sorry?
That's 7,000 employees.
Yes, we have.
Staffs. I mean, the warehouse and. Yeah.
Next one is, so they have given some, you know, G2P and other kind of words. What is G2P standing for?
Goods to pick up.
Goods to pick. And there is another term. What is that?
R2G. No, not R2G.
R2G, yeah. Robot to, what is G? So there are two things, G2P and R2G. Goods to picker and robot to goods.
Correct.
So The picker is usually they're referring to the person, and robot, obviously the robot will do some kind of the picking itself. That is R2GM.
And
G2.
both these terms are given in that warehouses picking section.
Yes, yes. So previously they were just working on more of automation and other things, these machines, but now they are compatible of picking also. Then how many supermarket chains are there in Tesla? Why this is important? Because supermarket, they are even in terms of economic crisis and all, they will be there. Why? Because they give basic necessity. So usually people in supply chain industry or logistic, if you talk about, they want to have clients where they'll have sustainable revenue. In fact, in the last pre-scene, we have a logistic company. We are focusing more into this retail players because they have sustainable growth. When population is growing, the demand is growing, right? How many major supermarket chains are there in Tesla?
Five.
It's 5. Okay. Okay. Moving forward. Gearing we just discussed. I hope it will be fine for you quickly. What is the financial gearing ratio for RB with the second formula? Gearing is 49%. Okay. I think no need to discuss that. Then what is the main focus of RB's R&D activities? You can give different answers. Or why we are doing R&D? Simple as that. We all understand R&D is very expensive things to do, right? It's very expensive for the business, and also the success ratio is less in R&D. Therefore, there are a lot of companies who want other businesses to do R&D. They'll just do reverse engineering and copy the product. Like many Chinese company also do that, because the person who is doing for the first time, person as in I'm referring to company, they have to put in lot of efforts. And out of 10, maybe 1 will be successful, 10% of that. So why we are doing R&D, or why R&D is important for our business?
I think it's important because we have to stay ahead of our competitors. From what we know from the pre-scene, there are a number of competitors, of which PowerBot is one of them. And because of the field we are in, automation, innovation can be or is a critical success factor. So it's important that we stay ahead of the curve, and R&D is central to that.
And I'll just add, Ms. Basi, the prime aim of any engineering products, whether it's a software, mechanical, electrical, is to ease the use of given product. And if you don't innovate for your consumers and make it easier for them, and it relates to competition as well, I mean, you can get obsolete as well. So this is an existential war. Innovation is just not to find something new, but it's an existential war as well.
Yes, that's very true. A small change in technology or small upgradation can save millions, even billions of dollars for any of the client. So you cannot, retain the clients when it comes to cost, because they have their pressure, they have their shareholders and stakeholders satisfied. If you are not upgrading it, if you are not creating more and more value with the time, we can immediately go out of business, despite being a very, very, old company. That's all is there. But in terms of technology, when a new thing comes or a disruption comes, you cannot retain them. We have a lot of example like what happened with Uber, what Uber did, right? Or Amazon also have done a lot of disruptions we have in different industries. You cannot retain the clients. So we have to come up something every quarter or every year at least how we can improvise. We have to keep to the industry standards or we have to become an industry leader. So innovation or automation is a primary reason why we need to have the R&D activities. Next is how does the chief internal auditor report to?
Audit committee.
Audit committee is very simple. How has the RB share price performed over the last 5 years? What it was last 5 years? I mean, before 5 years, what was the peak and what is current? 3 share price also, if you say, that will be fine.
See, if you see the entire graph, it's hovering between 130 to between 100 130. I mean, since I've gone just one spike beyond 250, but average you see.
All right. Others also, please give your points. Aditi, why you are very silent today? All okay?
Yes, Misbah, all okay. I'm looking at all these slides. I'm opening two
You
tabs.
can look at the pre-scene also to answer if some of the points you are not confident. It's okay.
Yeah. Okay.
Please answer this question, Aditi. What was our share price? How our share price performed in the last 5 years? What was the high? What was the low?
So when we started, it was 130, and then it spiked. Highest was 260, and then current price is 100.
How much it was last 5 years exactly?
So when we listed, so initially it was 130, and then the maximum in between was 260, and then now it is 100.
Okay.
Yeah.
Then what is the key feature of distributed systems? Key feature means basically they are talking about the advantages of AMR. What does AMR stand for? Autonomous mobile robots. So what does they do? As the name suggests, it's more of working on high level of autonomy or working on their own. Okay, next is what growth in revenue did we see? Or what does RB has seen? What is the percentage we just did? What is the percentage of revenue growth from 21 to 22?
%7.5%.
7.5. And what was for computer?
Uh, 9.9%.
9.9. Simple. Okay. Few more guys. Which company has recently opened its first lights out warehouse and what does this phrase mean? So basically company name and is it a advantage, is a strength for our company, or it's an opportunity, or it's a positivity or a negative news like that? What does it mean for us?
The company is Tesla and Foods, and it's a lights out warehouse is a warehouse that does not need any human interference. So it is fully autonomous.
Okay. How this news article will be taken by stakeholders? Just an added question to that. Somebody else answer. Harish, can you try? Or Ray? How this news will be taken by our stakeholders? Very simple. Hello? Am I audible?
Yeah, yes, Miss Bhai, yes.
I think it's likely to be viewed favorably by the shareholders, and the reason why is because if it reduces the amount of human interference down to nil, it means there's less wages to be paid out, which can increase, which can reduce our costs, but also increase the profits. And an increase in profits means we can either retain more profit for future investment, or we can pay out more dividend. So I think it is likely to be viewed favorably by the shareholders.
All right. It will be favorable, and it can also work as a marketing for a lot of our clients or future clients also, that we have been an industry leader in that. I think in the news they have also mentioned we are one of the first to do that, right? It's not very common in the industry. Ultimately, it will affect our reputation as well. Okay. Then which board member is responsible for product safety? Just go to the board of directors quickly.
It says that Dr. Hassan Kataf, Director of Research.
Is he responsible for safety also?
Yes, the responsible for product safety.
Yeah, Dr. Hassan. Okay. In exam, if you want to write name, just write Hassan K, or just write it in short form. Okay. Sometimes it's difficult to pronounce the names. Next is very simple. When we get listed, okay, I'll just say when we were founded and in which year we got listed. When did RB was founded and started, and in which year we got listed? Which year the company was founded? 19. We discussed this so much time. It's been 70 years plus, right?
1952.
1952. And Hello? I think there was network issue from my side. Yeah. So which year we got listed?
Listed in 90.
71.
Yeah.
1971.
Yes. And how much cash we have, we just discussed. Okay. Okay. The 19th question is interesting. I want more than one person to answer this. What is the main benefit of having narrow aisles in warehouse and also the associated cost? So basically what they're referring to, the space between. If it is narrow, then you can have more space to keep the goods. But the problem with that can be it won't move around. Okay. Yeah. Space in between. What is the benefit of having narrow space between the shelves? Yeah.
Like it will be easier for forklifts, so they can remove out the product from there and all, like between.
No, movement will be easy when you have big. You're talking about opposite.
More storage. Like we can
More storage.
include more rows so that more storage happens.
Yes. Movement will be difficult in fact because smaller. What is the other advantage? Usually if you see warehouses in near the city, they'll have this narrow, but when it is outside the cities, they can have a bigger space as well.
To operate in those narrow aisles, we need more skilled operators.
More skill operator, yes, or maybe automation will be better there.
Mm.
You need a smaller forklift.
Yeah, and that costs more to buy.
Cost more, yes. Without cost will be more, but the advantage is you can keep more goods. You'll have more space. Again, that will reduce the cost other way around. So more or less, we can have advantages also, or more advantages, I would say, because you're utilizing the space in a better way. That's it. Last one is very simple. What's the dividend payout ratio? What is our dividend? What we paid recently? We were on the same page. This is our dividend. Okay, just calculate it to be exactly 426 divided by 1875. How much it is coming? 22.7. Okay. And if you look at our computer, it is coming to 21 point something. Very similar only. These are very basic question, but even minute details you should know about the pre-scene. So I think you guys need to read the pre-scene again and again in more detail. As I told, it's good to read once daily in the morning or evening before going to bed. That's a good time to read and make notes also. If it is hard copy, you have printed it, it's even helpful. All right. So financials we have done. Now we have to do the other fundamental paper also, but we'll be referring to pre-scene every time or whatever concept we discuss. So before we start the class, I want at least one student to give a good overview or we can divide one person to give overview of the theory, one will talk about finances. Now whatever concept will look, we'll try to relate to it. So we have got 2-3 important hints which I believe can be important for your exam. One is raising finance is a challenge for us. That's a weakness we can say. But one opportunity, and that's also a strength, is the increased demand for this autonomous products, what we are doing. Okay, these two things are very important for now. And when we'll do it in detail, we'll get more points. Okay, so please start working on SWOT analysis. SWOT for the entire pre-C, SWOT for the board. First thing. Second thing is you want to start making risk list, risk and risk management. Okay, and stakeholders, 20 stakeholders and their needs. For your reference, I'll put that on the group and you'll get an idea. Maybe before tomorrow's class, you can at least finish the SWOT of the board and the stakeholder analysis. This will just take 20-30 minutes, not more than that. The risk analysis you can finish by next week's class. So tomorrow we'll again start at the same time. Any questions?
No, Misbah.